So, Rich, before you got on, I was telling Jeff that and Amy that I have a quick story given that Jeff is in Scottsdale.
Yep.
And so, I've got, it's a 60-second story. You ready for it?
Bring it on.
Do it.
So, it's actually one that I oftentimes use in speeches. So, I might be stealing my own thunder here a little bit. But I remember talking to somebody who told me the story about a, a Cadillac dealer in Scottsdale in the middle of August. And, it's 3 in the afternoon and, the vultures are circling or whatever. It's just, it's 180 degrees in the shade.
Mm.
And all the car salesmen are sitting in the air conditioned showroom, just not wanting, it's so hot outside. And they see this guy in flip flops and raggedy clothes on this old bike pedaling toward the dealership. They're kind of watching him, and he gets off his bike and he's looking at these cars, and all the salespeople are like, "There's no way I'm going out there. This is a joke. This is a joke. Somebody's got to wait on this guy or go say hi." So the task falls to the lowest rung salesperson, because he's the junior guy. So he goes out to meet this guy in rags on an old bike and flip flops. Well, it turns out it's Alice Cooper, and good old Alice buys 5 Cadillacs from this salesperson. So you just never know. First, Jeff, you never know who you're going to be sitting next to in a restaurant in Scottsdale. But just as importantly, you never know who might really make your day, make your month in terms of business. So, do you ever see Alice Cooper wandering around playing golf or driving Cadillacs?
Yeah, no, I've been in celebrity tournaments with Alice Cooper. He's a resident here, and he had a bar downtown at one time. I don't think he does anymore and stuff, but yeah, you see him around. Maybe not in the summer.
He had a bar in Cleveland too for years called Cooperstown that was right outside Progressive Field for about 8 to 10 years. Was one of the more popular pre and post Indians game hangouts. So
Same here.
He's a very good golfer.
He is a good golfer. Yeah, he's a good golfer, and it was Cooperstown here also, and it was right next to both the Phoenix Suns arena, and also the Diamondback arena. But I don't think it's there anymore.
Interesting. Happy Friday, everyone. Rich Swerbinsky with the Mortgage Collaborative here with the Rundown with Rob and Rich, where we take you into the weekend by running through the week that was in the mortgage industry. And as always, pleased to be joined my esteemed colleague and co-host, rocking the virtual background, I think, for the first time, Rob, ever. So you just keep innovating.
Well, Rich, I'm in a Volkswagen Beetle. And I think it would be so nice looking the shredded ceiling of the Beetle. So that's why I went with virtual.
Okay, well, thank you for always thinking of the show first, Rob. So, and this week, really pleased to be joined in the co-host seat. Good longtime friend, a guy with a really impeccable track record in our industry, the CEO of InGenius, Jeff Walton. Jeff, thanks for joining us.
Good to be here. Thanks for having me on the show.
Yeah, we wanted to have you on. Recruiting is such a huge topic right now. And your company, InGenius, is a data analytics company for recruiting in the mortgage and real estate industry. You guys are looking at all kinds of really compelling data that is driving decisions for mortgage lenders on the hire, not hire, recruit, retain side. So really, really eager to get into the conversation. And we've heard nothing but great things. We partnered up with you guys before you even really started getting going. And
totally.
One of my favorite sayings is bet on the jockey, not the horse. You got a good enough jockey, and you have a brilliant product as well. But it was quickly easy to see with InGenius that you had something pretty compelling, and proof's been in the pudding. Great engagement with our members just so far these last several months. So.
Yeah, absolutely. We first started selling in September of 2020 was our first close, and we're up to 34 logos, and half of those are TMC members, as a matter of fact. So, and that's accelerating rather rapidly as people are seeing what we have, and the need is clearly out there right now. In order to grow your company and purchase business, you got to be doing this. You got to be recruiting, and so it's been exciting, and the feedback has been that our data is incredibly accurate compared to what's out there in the marketplace. And we get that constantly. And, and it makes sense. There's a lot of good reasons for that.
You got to be careful. There's a lot of companies out there selling data, and data is just not data. And a lot of lenders or businesses in general feel like, oh, I need to be in the business of buying data. How and what you buy in the data world, very important. Something I'd also like to dig into a little bit deeper as we get into the show here, Jeff.
Sure, absolutely.
Awesome. Let's go ahead and get into it. As always, highly interactive format here with the rundown. Any questions, comments, thoughts, feel free to pump in the chat, the Q&A. We will incorporate it into the show. Also want to state at the beginning of the show, our podcast listeners, a lot of you listen on podcasts, join our live broadcast on Fridays at 3 p.m. Eastern on Zoom. You can also watch us on YouTube, post live video. Rob, jobs report this morning, way better than expected. Unemployment ticks back down to 3.5%, matching the near or all-time low levels that we hit just before the pandemic, the onset of the pandemic. 528,000 new jobs in July, pretty significantly beating expectations. Wage growth also beats expectations. So positive news for the labor market and U.S. economy, resilient job market, stock market tanks, 10-year treasury yield goes up 20, 25 basis points because the market, what the investors and the market is saying that right now, Rob, if I'm understanding this right, is like this report is too good. This is going to make the Fed more aggressive. We're going to get bigger hikes. There's a bigger chance of a recession, even though what percentage of our audience do you think is cheering for a recession? You're on mute, Rob. I think you're on mute.
What percentage of what, Rich?
Is of our audience you think is recessions equal refis, right? I remember, some years I was compensated on volume, cheering for a couple of economic numbers to be bad.
Right. So, and you can hear me okay?
Yes.
Good. So, you can't pick up a newspaper, you can't watch any of the financial news shows or the radio shows without recession. And I keep saying, I'm not convinced that we're in a recession, but plenty of people will argue with me. Once again, you look at the restaurants, you look at the jobs number today, really the unemployment rate and the balance sheet of families that are out there and so on, it just doesn't point to a recession. And of course, if you're arguing for a recession, then rates are going to go down. Long-term rates are going to go down. So great. I don't know how much of a refi boom there will be. It'll be basically refinancing all of the loans that have been originated since February.
All this, a lot of credit card debt out there. More credit card debt than ever. It's the average rate of like 16, 17%. So something to remember.
That's true. I can't disagree with you there in terms of cash out refis. And it certainly points toward companies who are doing seconds or HELOCs, and the environment has certainly changed. I'm coming out of the Michigan Mortgage Lenders Association conference in Grand Rapids, and a lot of the conversation there focused on not only the economy, but how to adapt companies in terms of their products that they're offering, retraining their loan officers or honing the loan officer skills in terms of being able to sell these alternative products, and companies looking at renovation and construction to perm and bond programs and so forth and so on. And which led me to think about today's session. I wanted to ask Jeff, in terms of the loan officer recruiting landscape, Jeff, how have you seen that change in recent months or recent years even, And maybe you can go back to how you even came up with the idea to start the company.
Yeah, well, I think that I think that the market is changing in recruiting by making data actionable, right? And by being able to integrate it into your CRM and action off of your analytics, right? So I think it's becoming more scientific, right? So being able to identify those recruits, or if you're wholesale, those brokers that you want to prospect, by able to identify who those folks are and match them up to the strengths of your company, and then build a brand with those people at scale, is a whole different ball game than it used to be done. Being able to focus on people in markets you want, with the volume that you do, with the product that you do, is a game changer in terms of recruiting today versus yesteryear or 2 years ago. So that to me is one of the bigger differences that we're creating. We saw that need, right? And we had a team. My co-founders capitalized on that, and that's where we ended up with the product today.
So what about the there's definitely a school of thought, and I wouldn't say that I'm not in that school of thought, that says that a recruiting process and finding loan officers, the recruiting process especially, might take years of just running into that same person at conferences or luncheons or whatever, getting to know them a little bit, and just finally at some point, we're at a lunch, I'm at lunch with Jeff Walden, and you happen to say, and I say, Jeff, how's it going? And you say something like, oh, it's been better. Or, just some little tidbit. And I immediately think, oh, I should talk to Jeff. So does that still exist, first of all? And what makes your system better in terms of that?
Well, so does that still exist? Take the first one, and absolutely it does. It's still a belly to belly industry, right? you buy from people, whether it's technology or recruit people or whatever you do. It's still a very, very human experience in the mortgage industry, unlike some other industries where it's more transactional. But I would say that that's going to always exist. What's different about it is being able to proliferate your name and do it at scale, right? And so what differentiates us, what we see is you've got like 3,200 counties in the United States, and a lot of this data comes off deed data. And all of these counties aggregate that data differently and have different technologies or no technology, right? And so it comes out of these counties, and it's messy, right? If you put a middle initial in there, or use a full name of Jeffrey instead of Jeff, or whatever you do, it can come up totally different. And so when you source that data, it's all over the place. So you've got to find a way to make that data more accurate, right? And so that's what we did. We looked at it and said, okay, we can't use just one source of deed data. We're going to use 3 different sources of deed data. We're going to use HMDA. We're going to use NMLS. We're going to use MLS. And so we take all that data, and the difference in our product is we found a way, a patent pending process way, to combine all that data, bounce it off each other to make it far more accurate than your just normal one source deed data. And when you do that and you back it up, and it becomes far more accurate. That's the real big difference.
So do you view yourselves as a competitor to the traditional recruiter or HR department, or a tool that the traditional recruiter or HR department can use?
No, we feel that that's our customer, right? So particularly within mortgage companies. And so you get recruiting teams within mortgage companies, and now they're able to take our platform and they can be much more strategic in recruiting loan officers that best fit for their organization. As an example, they can go in and through dynamic filters is how we structure our platform, and you can pick your strengths that match with their strengths, right? So you want somebody, you're an independent mortgage banker, and you want somebody that's doing between 20 million and 60 million, let's say. You want somebody doing this year at least 60% purchase business, and you want somebody to be profitable. You want them doing 20 to 30% government business. You can take all of that and apply it as a filter, and up pops in the marketplace you're looking those people to best match your strengths. So now the other piece is, let's say you don't do a lot of jumbo, so it's 5% less or less jumbo. So now you get people that are going to be more successful at your company and also are going to have more longevity than if you didn't seek out those people that match best with you.
So does your system, the product, also work for companies looking for wholesale account executives or underwriters or compliance people?
So it definitely does for brokers, but it does not do for staff, right? It's looking for people that that are it's generally salespeople or realtors, right? So we have a relationship-based module where you can go out and see what your realtor's doing, right? Are they cheating on you? You can see what other realtors are doing that you're looking to prospect, and account executives can look for brokers that they're looking to prospect, right? And they can tell, but account executive can tell what market share they have of a brokerage, right? They can tell how much they have, what business they're doing with them. They can tell how much other people are doing with them. So it really makes it transparent. It allows you to manage your account much better on wholesale.
And what is the usual sales cycle? Kind of getting into the weeds here a little bit, but when a company first contacts you, how is it? So I'm the reason why I'm asking is when I was a partner back in the, when dinosaurs ruled the world at Tuttle and Company back in the 80s and 90s, the sales cycle for our hedging services, and we were the first hedging company out there, but back then it could take years, easily months and months and months, to prove the value of a hedging service to the capital markets group. What is your sales cycle like? How long does it take?
It just depends, but I would say on average, it's probably been somewhere between 60 and 90 days. It's just a matter of making sure all the stakeholders, have had the chance to examine, the tool or the platform. But, we're in red lines with a top 5 US bank. We first demoed them in April of 2020, right? So, the large depository might take a little bit more and stuff, but independent mortgage bankers, 60 to 90 days.
Yeah, well, that's good. And what about in terms of your usefulness for a company with 10 people, 10 originators versus a big bank with 5,000? Is there a difference in usefulness?
I mean, no, it's useful to both, I believe. It's just a matter, are you trying to grow, right? And so recently, we had a particular client that was opening wholesale, and they were at the genesis of it, and they just had a handful of account executives, and we were like, yeah, no, we can grow with you. We can give you data for your size of what you need based on who's using it, and then as you grow, we can grow our platform with you. So it's not like a huge hurdle to necessarily get in. We fit it and tailor it to your needs of your company and the size of your company.
Very good. Very interesting. Rich, I didn't mean to monopolize all the questions here, so go ahead and jump in.
This is the Rundown with Rob and Rich. I'm Rich Swerbinsky with the Mortgage Collaborative, joined as always by Rob Krisman, and this week, InGenius CEO Jeff Walton. A lot of funny comments in the chat about Rob's background and Jeff's piano, and some nice comments about the value and usefulness of InGenius and the data you guys provide. And it's using data in a way that mortgage lenders have not used data in the past. I remember when I was recruiting loan originators, I would have them send me their production reports from the year prior, but even had some of those that were fudged, and certainly doesn't account for the current climate. We're in a much different climate, obviously, right now than we have been for the last couple of years. Never before would a previous year production report be more meaningless. So you guys really break it down. I mean, explain you can, on a very granular level on the recruiting side, learn everything about a loan originator and really make good decisions on that person's value and, decisions on hire, not to hire, and what level of bonusing and all that good stuff.
Yeah, I remember the days I need 2 years W-2s and a year-to-date pay stub and production reports. And I remember, trying to get that one out of people too, managing managers that you're asking them to get it out of the recruit and stuff. And it's like, it comes down and trying to hire them, and where's the W-2s and pay stubs? Oh, well, it was always crazy. Right. So now you have that information. And why it's also important to get accurate information on production of that recruit is that they're going to come to you and say, well, I do this much. And you say, well, we've got our data on you, and it says you do this much. And if you're not accurate in that data, one, you're going to look stupid, right? Like, how competent is your company that you're telling me this? No, that's not what I do. And that happens in the marketplace with existing data platforms. So we now make it so that you look very credible and you're accurate, which is insanely important, right? But all that back and forth goes away. You know exactly what they do. You know how much purchase, how much refi, you know how much government, you know how much jumbo, you know what timeframes. You can go all the way from January of 18 to current and anything in between, and you can pull what those people did. And some of that's important because what we also see in the data is we see people at banks that are new, and you can track people, right? And all of a sudden their production goes up and up and up, and all of a sudden you see them get picked off and go to an independent mortgage banker because they can increase their income. And you see that all the time in terms of watching the data. It's a trend that definitely happens, right? And so you can follow those people and see when you should be offering them positions.
Another way too that lenders are using data, we've been talking a lot on this show, especially since the change in the White House, just about fair lending. And particular banks already are subject to fair lending audits and a lot of internal and external regulation that has them better prepared to understand the issues and to comply with them. But on the independent mortgage bank side, obviously a lot of talk about redlining and a big focus on making sure everybody's got a fair shot when it comes to buying a house and getting financing. And the first kind of
Rich,
domino. Yep.
I gotta jump off for like 1 minute.
Okay.
I'm just gonna
jump off. Okay. You're talking about
everywhere. I felt like I should be doing this the whole time.
You would have been blocking us out anyway on the compliance topic, but but yeah, so with Trident Mortgage and as part of the Berkshire Hathaway kind of family of in-house real estate mortgage companies, got levied a pretty serious fine. And it was all stuff, according to Trident, that happened pre-2019 too. So lenders, like, something to keep in mind, like what happened in the past is still very relevant today. And using data to understand your book of business relevant to the demographics of where you lend also very important, right?
Yeah, so the Civil Rights Department of the Justice Department has come out and said that they're going to make this a big piece of their enforcement. Unfortunately for Trident Mortgage, who is connected to Fox and Roach, all they were doing was financing, the houses that their realtors that they're tied to sold, and they get written up for basically redlining, saying that, and this is how they're measuring it, right? They're looking in majority minority census tracts, right, where the majority of the people in that census tract is a minority, right? And they're saying, what percent that got lent there, are you at the same percentage levels that is being lent in that particular tract? Well, we've got clients calling us now knowing that we have a fair lending module, right? Diverse markets module. And they're saying, hey, help us. Can you help us identify this? And we can go in and can tell you exactly what you're doing in those majority minority marketplaces and census tracts. And then we can also tell you what your competition is doing, right? So that you know. And we can give you the ability to have a plan. So if you get, if you have the CFPB come in and start asking you about this, you can have a plan in place that says, yes, we recognize this, we know, and this is our plan. And with our diverse markets module, you can actually go into those markets, identify and recruit minority loan officers, right? And which then in fact puts you with minority realtors in a lot of cases. And you can have a plan around this so you can avoid a $24 million fine, which is obviously put them out of business. But it's a real thing. And we've got clients that are worried about this, and we're helping them with our data.
Good stuff. Yeah, and a very relevant topic, and one that, independent mortgage banks are paying more attention to now. Broadly, maybe not even enough would be my, kind of high level take on it. But will be interesting just to see what is to follow. It's CFPB and Justice Department clearly focused on the issue for good reason, and lenders certainly need to be aware. So, Jeff, more broadly though, a guy that's been in the industry a long time and has had success at a lot of different types of companies, something really cool about you. You've been kind of ahead of the curve. Just curious as to your more broad perspective on where the industry is at right now. Obviously, there's a supply issue, young people in general. A lot of statistics have come out last week about just the frustration level of young people that want to buy homes. Got some data last week on just savings rates and credit card balances of young people as well. It seems like there's a lot of tail of the dog pandemic stuff that's starting to have an impact on our industry. Clearly a lot of demand to buy housing out there, but some unique headwinds. And would just be interested in your perspective on where the industry is kind of at right now.
Yeah, no, it's a crazy market where you've got the demand you have, coupled with a good economy. And then all of a sudden you have a situation where interest rates are rising, and it's I think I read that it's 76% more expensive to a house payment, 76% higher than it was a year ago. I mean, that's an incredulous number. And also that these younger kids are paying, 49% of their income is going towards, a house payment, right? As opposed to, maybe 20 years ago where it was closer to, 28% or 30%. So that's a huge increase, and it's definitely a struggle for them. But I think that where there's demand, there's innovation, right? And I think you might see some things come back, like shared appreciation, mortgages. Those are back in the marketplace. I think that ARMs are going to be back in the marketplace clearly. But I also think that eventually supply catches up. Everybody keeps saying that it's not, that they don't necessarily predict it in the near future. But Ivy Zellman came out in February, was at a talk, and she said her data shows that we're actually going to reach that peak, and demand is going to, and with expense of houses going up and a little bit of a reduce of demand and inventory going up because people are building projects and that already have them on the works, already have the money for them, that's going to keep coming. And she sees a tipping point coming sometime early next year, as I took it. Don't let me quote her exactly and stuff, as I understand it. So we'll see, right? We'll see. But things have a way of evening out in the long run, and people have a way of finding things. I'm just happy 2 of my 3 daughters bought a house before everything went crazy, right? So that's all good. But yeah, young people are struggling.
Rob, we put this picture up while you were on hiatus there, so just so we didn't lose you completely from the show. But so
Ha.
Is- Oh boy, Rich.
sent
Is
in
that,
by a
is that
loyal fan yeah. So
is that the organization whose name will never be spoken out loud on this show?
I don't care. We can talk about them. Yeah, no, it's all good. So yeah, no, I'm just having a little fun.
I
So
don't know, Rich. I did see a lot. I did see Justin spending a lot of time with Jim Parks last week at the Western Secondary. So
were
I
they
don't
were
want to
they
keep
whispering sweet nothings into each other's ears?
sharing each other's straws. I don't know. I don't know what.
Oh, and I forgot that my Steph Curry, unbelievable, comes back
Oh,
7.5. My Steph Curry rookie card. So if it would have came back as like a 9.5 or a 10, it's $11,000 card. But alas, it's a $1,000 Steph Curry now. So
so how long did it take to get that graded, Rich?
like a little over 2 weeks. If you depends who you use. There's some companies that take longer. But my
And it was
LeBron rookie came back as a 9. So yeah, a lot of
and it's
exciting developments on my sports collectible front this last week.
just what just what readers and listeners and viewers are tuning in to hear about. But what does it cost to get a card graded? $30, $60?
Roughly $25. Yeah, expensive cards cost more. So
I don't know how that works, but all right.
yeah, the Curry rookie, it cost me, I think, like 150 to get it graded because it's over $1,000 card.
Really?
Mhm.
All right. Well, there you go. Supply, demand.
Man,
Anyway, yeah, I would, the Michigan mortgage lenders, Rich, going back to what you were talking about, the interesting thing is that a lot of individuals there were talking about youth, not only buying houses, but getting youth in our business. And we've talked about this before, and it's this recurring theme that the industry has. And it cracks me up when I'm sitting there with two people in their 70s and they're saying, we need more youth in this industry. And I'm thinking, one of the reasons we don't have youth is because you guys are still here, right? But I am starting to see, recent trips to Hawaii and to the Western Secondary and to Michigan. There are signs of younger people coming into the conferences, and of course, people who come into our business, it takes them a while to get up to speed to where the company is going to find them, in a position to send to a conference, because conferences aren't cheap, and travel and hotel and all that. But I'm starting to see it a little bit by little bit, and it's nice to see. Jeff was talking about the expense that young people are incurring just to own a home, and I don't know if there's a solution to that per se, but I will say that uh, Jeff, we've had Ivy on the show here, and she's mentioned a few things about supply and demand and builders and being overbuilt and so forth. And I don't know if I agree with everything Ivy says, but she certainly has a lot more research analysts than I have up my sleeve. But I am seeing in my travels certainly more for sale signs in neighborhoods, and a market that appears to be, when I talk to realtors, they're saying it's returning to more normal supply and demand and inventory levels. And I don't think anybody would mind returning to normal in terms of inventory, and certainly in terms of appreciation. 3% a year, 5% a year, much healthier for everybody concerned than 20% a year.
yeah, somebody's going to be really wrong on this inventory issue, Ivy, or the Jerry Howards in the conventional thinking of the world. But Jeff, how's the real estate market in Scottsdale? My parents were actually looking to potentially move to Scottsdale. They flew out there a couple months ago to look at houses, and they came back like 3 days later. They're like, maybe Ohio's not that bad.
It's been crazy here. Phoenix has been one of the better markets, and then if you look at the high end like Scottsdale and Paradise Valley, it's they've easily doubled, after over the last couple of years or more. It's kind of mind blowing, to be honest with you. It's like, wait a minute, how could they go up so much? And then with rates going up, you look at it and you go, okay, I guess everybody's going to hunker down. That's the other thing, right? So now people aren't going to move because they've got a good rate and they're in at a good price. And what would be the impetus for them to move up, move down, I guess. But it's definitely been hot.
Hey, Jeff, I've got a question returning to recruiting. Do you notice a difference in recruiting techniques between credit unions, banks, and independent mortgage banks in terms of who they're going after and how?
Yeah, definitely you see that. And you see, we have a tab for that where you can, match up with just banks, just credit unions, or just independent mortgage bankers, right? So you can filter for that. But banks are generally recruiting from other banks. I see that more often. And I would say credit unions are probably recruiting from banks and other credit unions. Or a lot of times they actually bring in and train at credit unions. We see more of that there probably. And then independent banks are definitely going after independent mortgage bankers. But like I said, they start picking off those higher performers at banks because on average they can pay them more or do pay them more. So that's generally what you see in the marketplace.
Questions in the chat about bonuses, Jeff. I mean, you're not seeing like bonus levels, but any anecdotal trends you're seeing on bonusing and other carrots lenders are dangling to recruits?
Yeah, so my thoughts on that would be anecdotal from what I've heard and stuff, but I would also say that we provide the weaponry. We don't shoot the gun. So so we're giving the data out, and how they recruit and what they're doing on bonuses, we don't get as much privy to and stuff. And I'm not sure that anybody would want to give up that data to socialize it either.
Does your software track all the lawsuits going on in the industry right now?
It does not. It does not. What we do know is that if
what's the average cross-country lawsuit amount right now?
Yeah, I don't know, but I do know that if you use our data to recruit, and you say that's where you found your candidates, it's much better than getting the data by the fact that you work somewhere and those people. And if you can show you got the data that they fit what you're looking for, right, and it made sense for your company, right, that's a pretty good reason.
InGenius told me we had to hire this guy or gal. It's not our fault. Sorry. The match was too good. It's like online dating, right? Like I'm looking for an LO. I need some margin. I need like 2% FHA. I need a little Southern Ohio, and hit the randomizer, and you got some dates lined up.
It's not my fault. It's the fault of the accurate data, right?
What about any truth to the rumors you guys are developing Tinder like swipe left and right features for LOs and hiring managers?
No, but I think that's a great idea.
Right. If you guys end up doing that, I just want a piece. So
yeah, always. Yeah, absolutely. We'll give you non-monetary credit all day long, Rich. All day long.
That's kind of credit. So
yeah. Like
Rob, how's the car ride going? You look like you're in pain. You look like somebody mentioned in the chat, looks like you're on a roller coaster. You got your seatbelt on, you're kind of pressed against the back there. You look somewhat terrified.
You need a crash helmet.
Having some connectivity issues.
No, I'm good. I'm good.
There you are.
There it is. Okay.
My end.
No, it's conference. Oh, can you hear me okay?
Not really.
No? All right. Hang on. What about now? Can you hear me now?
Now we can hear you. Yep.
Getting back to personnel in general and what some of the companies were talking about in Michigan and prior to that in California, there's definitely a huge swing toward measuring productivity for loan officers. And it's not so much, hey, Rich, hey, thanks, you're doing 3 million a month or you're doing 4 million a month. It's how much are we making off those loans? And are we better off maybe with Jeff, who's only doing $1 million a month, but he's not asking for concessions, extensions, renegotiations. He's not doing any bond loans and so forth. And so companies are taking a hard look at, once again, not so much volume, but profitability and how much that loan officer in their product, in their production, kind of grinds down the rest, like the ops staff. Like, oh, Rich is a pain in the neck. Yeah, he's doing 3 or 4 million a month, but every loan is a hassle. Versus somebody who's doing 1 million or 2 million a month and the loans sail through. So companies are definitely looking at that in terms of productivity and profitability versus just production volume. And that's actually makes all the sense in the world to me.
Govy mix, right? Jeff, is huge. I can't tell you how many members we have, like community banks, credit unions, independent mortgage banks, that they're just like, man, we're 5-10% Govy, and it kills me because it's profitable business and you can actually make some money. You're helping out, it's more rewarding business to do. But so I know a lot of companies are using technology like InGenius. They're, obviously strategically recruiting Govy originators. Same thing I would be doing if I was still.
Yeah. The ability to really filter for people doing government loans. You can really build, an ideal what you want in a marketplace. We have a market analytics module that actually helps you build profitable branches, which is kind of interesting. The other module or the other filter that's really good is you can go in and filter for loan officers that lend to low to moderate census tracts and zip codes, right? Which is highly important. And those are very, very profitable loans, right? You can sell those at a premium in the capital markets, as Rob would tell you.
Mm-hmm. This is the Rundown with Rob and Rich. I'm Rich Swerbinsky with the Mortgage Collaborative, and we have about 5 minutes left with the CEO of InGenius, Jeff Walton. Jeff, what about, you guys are dealing with a lot of data. Cybersecurity continues to be a big issue in the industry. Your data is more, non-personal info data, but being just a big data provider, I wanted to get your thoughts as well, just on the, the current state of cybersecurity and the ways our industry is protecting data and information, and maybe the ways some outside counterparties to the industry are looking at it as well.
Yeah, I don't think there's any question that it's going to become more and more critical. You've got to protect yourself against ransomware. You've got to protect yourself a bit about your data getting out, and PII, personally identifiable information, on consumers. It's a big risk, right? And we are fortunate that our data is not geared towards that. We don't have any SOC 2 requirements per se, like a lot of technology companies actually do. It's going to become more and more critical every day. There's no question in my mind.
Rob, you selling any data, Rob? You got that email list. It's got to be worth a ton of money. My God, it's like 100,000 people get that thing. I mean, you could sell out your reader base and probably make tons of money, no?
I tell people I will never, ever do that. The closest I come, Rich, is if somebody says, hey, do you know anybody at ABC that I could write to for some specific question? And I'll oftentimes, find some just like individual that they can reach out to for help. But if I try to monetize that or do something with my mailing list, that tends to put a dent, I would say, in my credibility.
So the prince that reached out to me about the 100 million Turkish lira I just inherited, that was not tied to you.
Rich, how many times do I have to tell you that Turkey does not have princes anymore? Those went away with the Ottoman Empire.
Well, Hopefully they still have mashed potatoes and gravy. Everything's changing in this world. Damn it. Well, Jeff, any weekend plans of note out in lovely Arizona? You're gonna play some of that grand piano is very popular in the chat.
Oh, that's good. Yeah, very nice. And my kids actually learned to play on that piano for sure. But so plans this weekend, actually, we are going up to Flagstaff, Arizona, which a lot of people might not know is about 7,000 feet in elevation. So it's about 25 degrees cooler than here. One of my daughters lives up there. And so we're going up there. We'll be playing golf tomorrow at 79 degrees when it's 104 down here.
How far can you, I mean, what does that add to a drive, the elevation?
I don't know what it adds, but it's 2 hours door to door.
No, I'm saying the drive of a golf ball. I'm sorry, the elevation.
Oh, I'm sorry.
Yeah.
To my drive, it's marginal, but it definitely does though. Yeah, for sure and stuff. I think you get 10, 15 yards out of it.
Rob, any weekend employee meetings at the Chrisman employee headquarters in the background there?
Myrtle is threatening layoffs again.
Wow.
The rumored layoffs that Myrtle's threatening match the rumored layoffs in other parts of the industry. But no, I head back to Reno tonight, and then Sunday head down to Orange County for an Accelerate Users Conference for a couple days. So,
very cool. Good stuff. Well, Jeff, thank you for joining us. Always enjoy getting your perspective on the industry. Appreciate the partnership with InGenius. Anybody who wants to learn more about InGenius, their technology, their software for recruiting, fair lending compliance, number of other things they're helping lenders with, reach out to me, anybody on our team. Their information's all over our website, a million different ways you can get a hold of Jeff or InGenius. And Jeff, thank you very much for joining us this week.
Thanks for having me, guys. I really appreciate it.
all right,
Rob,
guys.
safe travels back west. And to our audience, thanks as always for wrapping up the week with us. We're here every Friday at 3 p.m. Eastern with the Rundown with Rob and Rich. And until next Friday, have a great weekend. And next week, everyone, take care. Bye, guys.